You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risk involved and take into account your level of experience. Seek independent advice if necessary. That's it, guys. Okay, so that's your risk warning there, and we shall then go on to the chart. I've got a couple of things to discuss here. It is the market outlook that happens every Mondays and Thursdays, and I basically do the analysis beforehand, and we shall also look at opportunities out there posted and given by some pairs or instruments, and we shall cover majors, exotics, as well as gold. Okay, so we've got a couple of pairs here that I want to keep you guys aware of, but before that, just to give you a little bit of an outlook based on the economic calendar or fundamentals in some way or another. So here we are looking at Sunday itself. As you guys know, Sunday has sparked off the euro that happened this morning, and mainly it's due to the presidential election, and that's what has actually caused the euro to jump when market opened, based on Macron winning the elections. That's the first round of the elections going on in France. So that was the main reason for that huge market gap upwards that you can actually see here on the Euro JPY as well. But here, if we go on to the Euro USD itself on the 4-hour chart, I would like to clear all this one here first. A couple of things that I've actually noticed with the Euro USD. We'll straight go into Euro USD and the gap up there, and talk a little bit about pattern and what is to expect for the Euro USD. Then we go on to a few other majors, and only then we go on to exotics and further on with gold as well. Okay, so let me just clear off all these ones here, and just clear all that, and we shall just start with the Euro USD on the 4-hour chart. And here itself we have got a big gap up. Okay, so euro have actually jumped up, so a gap up there. Usually, I mean, based on the majority of times when you've got a huge market gap or a gap, the market usually would prefer to close that gap down. So that would actually be a gap down to close that market gap up, that happened during market open. So that is the one possibility that could actually happen there with the Euro USD. So that is just a bit of a general sort of outlook. But if we go on this way, what would actually then spark my interest as a patterns trader as well is a possible cup pattern right there. So I'll just draw that pattern here. Okay, and here, for example, there is a potential cup-like, and it's quite rounded as well, and you can see that the possible mouth of the cup is just at this area here, where it has actually sort of stopped, and the downward direction has actually started. So that coincidentally, if you look left, you could see that that's where the resistance have actually happened as well. So this is a possible cup and handle pattern, which usually could potentially, based on the theories of cup and handle pattern, bring it downwards, okay, downwards to about 50% Fibonacci level. Okay, usually that downward move would actually see a 50% drop of this huge move that is between the mouth of the cup and the base of the cup here. Okay, so that is the distance there. Okay, so if you pull your Fibonacci from this area here all the way up there, then you could see that you would expect the handle of the cup forming and come downwards to the 50% level. But there's something very interesting as well here. If we go on to, let's say, forecasting the drop at the 50%, there are other relevant factors as well that you can marry that up and sort of not confirm but strengthen that decision, that the decision of a possible drop of prices. Okay, so firstly, we've seen that the logic behind that would be a close of the gap and closing of that gap up, and the other thing as well is a possibility of a cup and handle pattern. So there are various other things as well from the patterns perspective that we can then expect that for. But we're looking at the 4-hour chart. So what you can then do is that it depends on your equity level, your risk level as well. You can always go on to lower time frames to look at a possibility of a downward type pattern. So like, for example, a bearish ABCD going downwards, a C to D that has a potential to go downwards could actually be then traded and looked for at the shorter time frame. Okay, so here itself, if I clear that one up, here you could see that you could see that now visually that is the circular type movement of a cup and handle formation. Okay, so that's coming downwards. Now if we pull a Fibonacci from this area here right to the very top there, you can see that your 50% is right here. Okay, so this is where we could expect, if based on the principles of cup and handle pattern, we may be looking into F4 here to the 1.0736 area, but the 1.0736 area to the upside is really close to the 0.750 area, so that is a psychological level to look up for. Now at the very top here, when you look left, you could see that resistant major resistant area there. You could always draw a sort of resistance zone there on the Euro USD for our chart. Okay, so that's the highest body and then the highest sort of wick right there, or the very top. So this gives you the area that could form the mouth of the cup area there. Okay, that's your resistance sort of zone as well. So we never, it's probably best not to draw a support resistant line, but a zone instead. Okay, now another thing to show you as well, very interesting, is that if I take that move right down here, let's say, let me change the color of that and the type of line as well, so it's clearer for you guys. Here, if I look at that, I mean from a geometric sort of perspective, if I look at that nice angle downwards and I draw a trend line from the very top to the very bottom here, yeah, and I move that all the way up here, okay, let me just do that. Okay, you can see that that's parallel. Yeah, I'm trying to draw a parallel type of line like that. Okay, now this becomes a perfect geometry in a way where you attach all these lines, let's say like this, okay, and you've got a kind of square there that could actually be perfect geometry. And the most interesting thing about drawing this perfect geometry, just based on that movement earlier on, let's just get rid of that. You've got these lines drawn just by that parallel line earlier on, right? Now, if we draw an attachment inside that line there, just to square it up like that, you could see that the center point area is really close to that 50% that we've actually drawn. Now that could then be really interesting, because that center area that we've actually drawn, just based on that geometric pattern that you've actually just seen here, would then confirm that the possible drop could be quite high in probability, and that possible drop that came down following a cup and handle pattern is at 50%, but then when we draw that cross, you see that is actually really you know, close to where the center point is. You can always adjust it a little bit like that, and when you adjust that, you can always look left and look at how prices have actually concentrated in these areas as possible or probable support resistant area or zone earlier, I mean previously. Okay, so you've got that as well going on there, and you can see all these areas that have actually formed very significant areas. So what does this mean is that just through drawing a pattern like this as well and confirming, having various ways of confirming you know, that drop, or to ascertain your decision of that drop, could add up on confirmation. Okay, could give you a better list of probabilities. The higher your probability lists are, then the higher the probability of that happening. Okay, so here we've got prices at 0.848. Now it's really close to 0.850 area, so we would like to look into a further drop under the 0.850 area, like 0.840 and below, to give you more momentum by the bears, okay, by the sellers. So here, as we go on to the left, let's say if it's falling down, you know, if it's falling further down, you can see that what will encourage the fall would also be in this area here, for example. That was a gap at that area, but we can always look into where it has actually, whether it's got more further drop previously, and it would actually encourage a further drop at this area here. Okay, so because here, for example, previously, if we look into the dates, yeah, this is for Euro USD, again we're on the 4-hour chart, That drop there happened, let's say, December last year, okay, 2016. Now that was a significant drop. So what I'm trying to say is that this area here, it's worth looking at as well when prices finally comes to this area. Okay, I will just mark that as a purple line, let's say. And the reason for that is that that was a significant fall. Now that significant fall, let's say all the way down here, that's 400 plus over pips downwards, and that actually happened last year in December, as I've mentioned, and that dropped from 0791 area. Okay, so that was quite close to the 0800 area. So what that actually tells us that we need to watch prices at 0800 area later on when prices come down further. If it does actually come down to the 1.0800 area and go further down, then that actually means that the process of dropping, price dropping or depreciating further could be speeding up as well. Why? Because in the past that was an area of significant drop. Okay, so these are areas to watch out for the Euro USD. So this is what we want to look out for. Always look to your right for the prices, where it is now in terms of price psychology or psychological numbers. Okay, and then look to the left and scroll as well, minimize and look to the left of an area that you could then draw a support resistant what you call that type of zone as well. So here, for example, if I done that earlier on already, here we've got that significant drop, so you can always mark that and mark that right at the very top. Here I don't need to mark that anymore because I've got that one marked already, that zone earlier on that's made up of these two red lines right there. So as you can see, Euro USD on the 4-hour chart gives you that opportunity to the downside, closing the gap also with a cup and handle pattern. On top of that, we've got significant drop of prices area when you look to the left as well, and you can always draw a significant support resistant zone or area. Okay, and as we go on to shorter time frames, you might be looking into possible, because we are looking at the possible drop type opportunity. So here we can always look into an ABCD as well. But as I've mentioned, if you want your probability to be high on an ABCD pattern, it's probably best to always look into the resistance or support, looking at the C point, creating resistance or support. At this point, if I go A, B, C, my C hasn't actually touched any one of the moving averages, so that wouldn't be, that will still happen most probably, or could possibly happen, but the probability may be low and the risk may be higher. Okay, because we've got an A, B, C, D, potential C to D dropping, but you've got prices finding support here on the 15 minutes chart. Okay, so maybe not just yet at this moment of time, but we want to always be very careful with how which time frame we are looking at as well. Okay, so here, for example, we still have got that gap. Looking at that gap here, the possibility of that, but at this point it is finding support on the 15 minutes chart, as we have seen earlier on the 5 minutes chart. On the 15 minutes chart, it's got support. So this one here is telling us on the short term, you may see some support first before the price drop any further. So with the Euro USD giving you some selling opportunity, what does that actually mean for the USD JPY is to give you a boost of support. So that would then cause the USD JPY to see the upside. So we will move into the USD JPY in a bit to look into whether or not we have got a opposite type pattern and whether or not we can plan further on an opposite type opportunity to the upside instead of the downside like the Euro USD. Okay, so here this is what we will be talking about on the for the Euro USD. Let's just go into the GBP USD first and see whether we have got anything that we could notice in terms of pattern, in terms of trend as well. But before anything else, I want to also remind you on a couple of things in terms of trend. If we want to look at, as of half an hour ago, when I look into the currency trend meter and things like that, I find that the euro, the CAD, and the AUD is on the upside in terms of its strength to the upside. And then the yen, the USD, and the CHF is looking at the downside bearish type trend. So we've got three strongest currency to the upside: euro, CAD, and AUD. And then we have got the weak weakest three would be the yen, the USD, and the CHF. So I want you guys to write that down and take note that is as of today. We could also match that up with what's going on with the 10 top movers as well. One of the first ones is the Euro JPY to the upside. So that does actually mirror what I've actually just read you, because if Euro JPY, Euro is one of the three to the upside, and yen is also one of the three to the downside. So that was a good match, and Euro JPY sort of topped the list out of the top 10 big movers or top movers. And this is giving us some opportunity on Euro JPY to the upside as well. So if we want to look into opportunities to the upside, if we want to actually find you know, patterns as well, we should be looking at bullish type pattern for Euro JPY. The next one is CAD JPY as well. It's looking like it is giving a lot of momentum to the upside, as well as AUD JPY. So we've got the first three itself on the top movers. The Euro JPY, the CAD JPY, and the AUD JPY, they are all on the positive side, meaning that they are investors are buying the Euro, buying the CAD, and buying the AUD. So that sort of really confirmed the three top strongest currency to the upside. And because they are all against the yen, they're actually selling the yen on a large scale, and they are actually buying all the other currencies, especially if it is against the yen. So yen is looking like really weak, has got more momentum to the downside, and the others are actually to the upside if it is against the yen. Okay, so this is the trend sort of picture that you need to have in mind, and in terms of the top movers as well, because quite a number of traders are asking me as well about GBP USD, let's say, or USD CHF, or anything else that's not really in the radar. Not really in the radar, meaning that they are looking at pairs that are not in one of the top 10 amongst the interested type pairs by the investors. So for those of you guys who are trading the GBP USD or trading the others that are not in the sort of top 10 looked by the investors, then you will find that these pairs may actually be trading a little bit slower. Okay, and they may actually be going on a sideway or just not moving too much, you know, all these kind of stuff. So this is the reason why we want to actually pick the right pair for the day, especially the ones that the investors are looking at and the investors are participating in that trade. So that's why it's almost imperative or important for you to actually consider the ones that are traded by the big boys by looking at the top 10 movers as well. Okay, all right, just as a tip for you guys. So GBP USD, let's just clear out all these ones here before we look into the USD JPY. So I'll just clear all these ones here, and let's just start from the basics. Now, this is one of the pair that I've just mentioned that's not in the radar of the investors as of today. Maybe they're waiting on a longer type trade or longer term type trade, maybe, who knows. Yeah, but as of now, we're just looking at that, and hence the reason it's not in the top 10 list, GBP USD. So you can see that very clearly on a 1 hour chart. Can you see that this whole the whole movement of candles are on the sideway? It's almost like it's pointing to a 3 o'clock type angle, and this kind of movement with all the candles on the sideway, not moving upwards too much, not moving downwards too much, and just, you know, I would say just moving on a range, on a sideway kind of range, would actually indicate uncertainty. So this is there's a lot of uncertainties just awaiting. Prices are in balance, awaiting a breakout. So they, you know, how long it would actually then move to the sideway much more, we'll never know until it breaks out, come back to the level again, and then breaks out even further. Okay, so at this stage, we're looking at all these movement here, and you can see that it may be creating more support, but it's just not very sure. But as we move on to the 4 hour chart, you can then see that it's got more what do you call that, momentum to the upside, or have created momentum to the upside, but it's above all three lines as well. And then all these three lines, which for those of you guys who are new here, the three lines that I use are the three exponential moving averages of 50, 100, as well as 200. Okay, exponential moving averages, or we could call it the EMA. Okay, so here, if you see the majority of candles on the 4-hour chart above all three lines is giving us a bit of a bias to the upside. But look at the price itself. Always look to the right for the price, and then look left for the levels. Okay, and when you look to the right, you'll see the price. It's bang on the psychological number of 00. So you've got 1.2800. So that is a very big no-no of entering a trade, or considering your TP point or things like that, because we need to understand where would the bulls take us. They would only take us above the psychological level further, so that we should then look at 10 pips above the 2800 area first before we plan anything. So at this stage as well, you've got that candle there, and it's all above all three lines, but then you've got a bearish candle forming and things like that. So things are not really clear at this stage. Now, when we go into the daily chart, it's still giving you the indication that there may actually be some room to the upside as prices are up above all three lines. Okay, but let's go back to the 4-hour chart, and now we'll start to look to the left as well, and let's see at this price of 1.2800. let's say, let's look at what did it do the last time. It has actually done, has got some support level here. So let's mark that support level as well. Okay, so this is a rejection candle, as you can actually see, and we go on to making that zone by the lowest body and then the lowest wick. Okay, so we'll mark it like that, and we go further to the left as much as we can, and we try to look into hints or clues in the past of where have actually candles concentrated close to where prices are now at this point of time. Has it actually created a significant support or resistance level or anything like that? So let's just use that, a bit of a shortcut here. Okay, I don't see any other level apart from that, support there, and now it's finding resistance potentially. So you see how that actually mirrors. We've got support here, you've got support here. All right, so let's just do that. Based on this one here, you've got resistance created there, you've got some support there and some support there. Now you've got prices stuck now in between these two zones. So what I would then say is, you've got that two zones now for GBP USD on the daily chart created by the 2880 area and 2795. So now we go back to the 4-hour chart, and let's look at it at a clearer level. Now you've got GBP USD on the 4-hour chart created by a zone here at 1.2795. Okay, now that 95 really close to 2800 psychological level. Now the top number here has got 1.2880, which is right on the dot of the 80 psychological number. So you can see that just easily done is to wait for prices to go under that zone to give you the direction to the downside, and above to give you the direction to the upside. So at this stage, it's probably best for us to wait till prices go under, but go under and touch the 1.2780 area and below. Once it has actually gone 12780 and below, like 1.2770 and below, then you have got that downward side bias. But that downward bias may actually be challenged by either one of these three lines. Okay, so we might find support at either one of these three lines and then bang on up again, but then the strength of the upside needs to be confirmed only once prices have actually gone above these two horizontal lines, purple lines right there. So at this stage, all I can tell you, GBP USD is just doing a bit of a sideway at the moment. It's uncertain, it's not clear, and it's not one of the pairs that the investors, bigger traders, are actually paying attention to. Hence the reason you are looking at not much movement going on at the moment for the GBP USD. It's just because it's not one of the ones that the bigger boys are paying attention to as well. Okay, so that's the reason why it's moving this way, this moment of time. So let's look into let's see, AUD USD right there, but I would like to go on to the USD JPY. Let's look into what's going on the USD JPY at this moment of time. Now, Very simply, at a glance, 4-hour chart, as you can see, it made that gap up as well, but then prices ended up to be in between all three lines on the 4-hour chart. So that's not a good sign, because it's just giving you a bit of uncertainty. It's not clear whether candles are above all three lines or under all three lines. So as we go on to the 1-hour chart, let's say, when you go to the 1-hour chart, it's giving you that indication that it's on the upside, but you have got a little bit of clarity, not clarity, the lack of clarity, because you have got all these three lines. As you can see, the three lines are the 50, the 100, and the 200 exponential moving averages. They are not giving you a direction to the upside. They're not moving very clearly. Like this one here, for example, just as an example, you've got all these three lines on the Euro USD. They are moving to the upside. They're not touching each other. They are not entangled. They are giving you a clear direction and moving upwards, pointing upwards like three little fingers. And that's a good sign when it's giving you that clear direction upwards. But you don't really get that here in the 1-hour chart for the USD JPY. So only 1-hour chart itself is just not giving you clarity. And as you go onto the 4-hour chart, it's trading in the middle of all three lines. So that's again not giving you the clarity of trend. Okay, and then if you go onto the daily chart, you have got prices under all three lines, but look at the way the candles are, the three lines, the way the EMAs are moving, are not giving you clarity of direction. You want the three lines to be moving like the candle. The candles are under all three lines moving down, then the three EMAs should be also pointing down separately, not entangled, not touching each other, and showing a direction to the downside or the direction to the upside. But this is not happening on the 1-hour chart, on the 4-hour chart, and the daily chart. So what does this mean? This means it's not perhaps a good time to consider trading in terms of timing, because it's just not giving you that clarity of direction. That is happening on all three time frames, 1 hour right up to the D1. But what if we go onto the 5-minute chart, looking into USD JPY, you still get that lack of clarity, because again, I don't see candles. I see a lot of power of candle to the downside on the 5-minute chart, because you have got majority of very long bearish type candle with a lot of strength. But then again, it just found a little bit of support now, but candles and prices are in between the lines, and I don't really like to consider anything if I see these candles are not above all three lines or under all three lines with a clear indication of trend by the three moving averages as well. Okay, so 15 minutes chart as well, we could see it's a little bit clearer. It's to the upside, meaning candles are above all three lines. It's pointing to the upside, but again, you have got a bit of a bearish sort of movement at this moment of time. Is it finding a bit of clarity? I myself am not really sure. I can actually guess and say, okay, possibly it might find a bit of a support at either one of the lines. But again, if we want to trade high probability, lower risk, we need to have a clear picture. At this stage, USD JPY is not giving me that clarity that I need. Okay, so hence I would just leave that aside as a pair that I would consider for now. Okay, perhaps the Euro USD would be clearer, but USD JPY, GBP USD is just giving me that waiting time to see what would happen in terms of price action as well as trend. Okay, so let's also move on to the Euro JPY, because the Euro JPY is one of my favorite pairs. Is best traded on a Thursday. You've always got average movement of pips to be higher on a Thursday for the Euro JPY. But not only that, the Euro JPY has got quite a number of pairs that are correlated to it very nicely. So we've got close to 7 to 8 pairs that correlate really highly with the Euro JPY. So if I look into the Euro JPY in terms of trend on the 1 hour chart, you could see that clarity as well. You could see that pump up of price has pushed, I mean, the gap, that opening gap price, market gap, has actually pushed prices to the upside. Okay, would it then cover that as well? Would then mirror the Euro USD move potentially, because of how it has actually moved. But here we have got prices above all three lines. The three lines are indicating an upward type momentum just by the way it behaves. It's got this very strong direction that all three lines are pointing towards, which is to the upside. Okay, which is a good sign. Now, when we look at the price 119.61, if we look at the two digits after the decimal, ignore the very last one, and you've got 119.61, let's say. Now, 61 is above the 50 psychological number. So that does actually give you a bit of an indication that the Euro JPY is traded with an upward or upside bias, okay, to the upside. So 119.62. So here, if we go into the 4-hour chart, you can see that that is still happening. But I don't really see these three lines really giving you that nice indication with pointing upwards, but it may be just starting to happen. Okay, there may be a potential to the upside. But again, if we look into 119.63, you could see that prices here coming down, coming up, but always look to the left, and you could see that you've got some concentration of candles finding support here. Now let's just look a little bit more, and you can see that prices have actually found support in various areas. So here, let's just mark this one here, lowest body, these family of candles here, the lowest body and the lowest wick. Okay, so that we've got a bit of a zone going on. Now let's just test that zone this moment of time, and let's just go further back and look at what had happened in the past. Yes, we have got a bit of a support going up, not that significant, but found resistance at this area here, and then it went back down again. But let's look at previous, further back. Further back, okay, we've got some support here, and then prices went up and down, but then found its way to the upside quite significantly. Okay, we've got further area of support as push, but this is considered quite a good type zone because we've got longish type candle piercing through, we've got various support resistance line as well. Let's quickly look at the daily chart and see whether we could notice anything else by pulling the prices to the upside. Now here, for example, on the daily chart, we can see that we have got a very, very strong or significant support in the past here. If you can see that area there, there's one there as well, of course, but we've got this one here, a very big push, but then you've got correction, but then it took prices all the way from this point right up to this point here. Okay, so that is a very, very significant move right there. That's close to about 2,000 plus pips to the upside. When did that actually happen for the Euro JPY? That actually happened in 2013 in April. So April 2013, we have had Euro JPY found support at this price today, close to the price of today, and has actually pushed prices really, really far up. So we would always need to then mark this area here, okay, all these areas here that it has actually found support all the way up. Now we go back to the 4-hour chart, and we go back and we see that these three areas has actually been drawn. Now, because the three areas that I've actually marked a high support area, okay, a very high support area. Now we've got a market gap as well, Euro JPY. Now there is a bit of a dilemma with what's going on with the price of Euro JPY. Okay, the dilemma is, number one, we have got a market gap that has happened, and usually the prices would like to close. Would prefer to close that gap. That means we're expecting prices to drop. But second dilemma is that at the same area now as well, it has actually found support and on the way out, on the way up, and it is exactly at the place where it has found support in 2013, going up 2,000 over pips for a period of time. So this is where we would need to be very careful here. You know, either one thing could actually happen first, whereby you could see a big push to the upside and then a very big movement almost suddenly to come downward. So we would need to first wait, and in doing that, or knowing how much are we going to wait, we would need to then look into the price. Okay, the price at 65 or so. Okay, as it go upwards, of course, you got an 80 psychological number as well to look out for. But at this stage, I would think it's probably better to be very, very conservative, to look at whether or not price goes a little bit more higher, okay, and aim at the 80, and what would it actually do once it goes to the 119.80 area. So that would be a good indication to know whether or not it'll push forward and challenge the psychological number of 80 and go further. If it does, then you've got higher highs, and that would actually then give you a better sort of indication. Because as we look right, we want to consider the psychological number. As we look left, you could see that you've got some resistant area as well. As you can see, if I zoom in a little bit more, you could see that where prices is at, it's really close to this area here where prices have actually fallen, and that was back in March this year itself, and that's another area. So we need to also consider this area here, okay, this area here with the highest body and the highest wick. Okay, so then I've made that zone now even thicker with 4 lines. Okay, so what I'm trying to say is that in order for you to understand whether or not it would make more move to the upside, it's probably best to go above this zone, this area here. So let me just mark this confusion zone at this moment of time right here. Okay, and this zone, how do you use this zone? Is just to wait until prices go above to give you that upward momentum push to the upside. Then you can say that it may have mirrored the 2013 move and could have much more room to go upwards. Okay, but if it does come downwards under this blue zone, then the preference of the market is to close the gap first before it make that rise up. Okay, but if it does come down and tries to close that gap, you would need to then look to the left and look at previous support. Where would prices find the support to then bounce upwards? Okay, for the Euro JPY 4-hour chart. All right, so do we actually get a better picture on the 5-minute chart in terms of trend as well? Let's just see that. You've got support found there, okay, and you've got support found on the 50 moving average there. You know, it's just stuck now at the moment. The prices at there on the 5-minute chart. As we go into the 15-minute chart, you've got prices a little bit higher, okay, than the 50 moving average. So that does actually show the biasness is to the upside, okay, not to the downside. Is yet to close that gap. So there's something going on in the market that is really pushing prices upwards. Maybe because of the elections, because of the Eurozone as well, you're looking at more and more potential to the upside. The other thing as well is it's got to do with the German business sentiments that was released today. It's of medium impact, not really high impact for Germany, but I think 2 to 3 results indicating the business sentiment index are actually positive, and they are quite good positively, you know, so that may have actually, you know, given that biasness more preference of the market to favor the upside or bullish sort of movement, or have impacted the movement to the bullish side. Okay, so that's maybe the reason. We need to also look into medium impact as of tomorrow. Tomorrow we are not looking at any high impact news in terms of economic data release until Wednesday. Okay, so Wednesday, I think the focus would actually be Australian dollar because you've got the CPI numbers looking at that. So we would still need to look into, if at all we've got AUD, let's say, on Wednesday being high impact news, we still have got to look at the top 10 movers, whether or not the investors are paying attention, and which currencies would they be paying attention to, and which direction have they actually taken that pair towards to as well. Very important. Okay, so here, as you can see, the movement higher, Euro JPY to the upside, yeah, and it's gapped up a little bit higher than the 50 moving average. And then if you go on to the 30 minutes chart, you could see that the movement is even higher, and the steepness of the 3 lines, the exponential moving averages, are also a little bit more steeper. So that is giving you the idea that for the short term, from 5 minutes right up to 30 minutes, there may be a bit more room to the upside. But when I say a little bit more room, it can actually still be as little as 5, 10, 15, 20 pips. Would it then be going out of this box? We're not sure as yet. Okay, it may be doing a little bit of 20 over pips or something like that, but still may be inside the box and not out of the zone as yet. So here we need to really be careful. Perhaps you never know. Maybe the market is still thinking, would like to balance or rebalance the price so that prices can actually go just sideways within the box as well. That is also another possibility. Okay, the longer the sideways takes, the bigger the breakout would be too. All right, so the 4-hour chart, 1-hour chart, sorry, you can see that gap up, as I've mentioned, from 30 minutes. It just gets higher and higher. So the prices just gets higher and higher above all the 3 lines. If you put it back from 5 minutes and travel from 5, 15, 30 to 1 hour, you can see that movement is favoring the upside move. Okay, because it just positions itself higher and higher above the 3 lines as well. That 3 lines are your average movement of candles per day. Okay, so there we go. So you got your Euro JPY there given to you, and let's just look into gold as well. Okay, let's look into gold and see what's going on with gold. On the daily chart, I'll just start with the daily chart, as we have talked a little bit more. We have been following through this possible Z-like, this possible W-like pattern, and we're looking into possibility of prices to the upside and from C to D. So that's my X there, A, B, C, and then we're projecting the D. But at this moment of time, it has actually found that resistance there already. So I would say that there may be a possibility of prices not yet completing that W-like pattern, but it may be finding resistance. Now, the reason for this happening is due to what we've just talked about with the gap down or the possible drop of the euro. So that may be then giving the rise of the dollar, okay, versus the yen. So this is basically what's happening. And apart from that, there's a lot of other things that are happening on the geopolitical side of things. Now, the thing to let you know as well is the US basically has got a financial weapon. That financial weapon is actually being able to print money. So they may call it, with many other names like quantitative easing, QE, and all that kind of thing. All that is just printing of money and plucking money out of thin air. Okay, so when they actually do that, now what is exactly happening between US and China is that they are actually, the more the US prints money, the more China has to print money as well. Okay, so the reason is because of this. So yuan is still packed in some way or another. They may be actually, giving traders and investors a lot of mixed signals saying that the yuan is not packed with the dollar, dollar is not packed with the yuan, all that kind of things. But from the way, the mechanics of how things are moving, it looks like the yuan is definitely packed with the dollar. So that is a very big trick. So the more the US, if you hear news about US printing money more, or they've got more money flow inside the US to push the to increase the money supply, then what China would then need to do is to also print. Okay, so when they print a lot of money, because they need to print as much yuan as well, because when the US prints money, it goes into China too, okay, because of all the securities that they are buying and things like that. So a lot of dollar goes into China, and when it goes into China, the central bank of China needs to balance up the amount of US dollars inside China with yuan, so they start printing the yuan. Okay, so when the central bank in China prints the yuan, what happens is, this is what you're looking at now, is that you've got the appreciation of the yuan. Okay, the yuan goes up as well. When it goes up, it increases the price of exports for China, which is a very big advantage for the US, because the more expensive it is for Chinese product, the cheaper would it actually be for the US product. So the US is actually not only printing money, exporting. They are actually exporting inflation into China. But China, when that does actually happen, it will hurt their exports. But what that would then do for the US is to bring more money into the US, because the products are then cheaper. Okay, so this is what's going on. So all you need to also look at is whether or not you have got more appreciation. If the Chinese yuan goes up, that actually means that their things are more expensive there, but it's actually cheaper for the US products, and more people are buying the US products, more exports are happening in the US, so more money coming in. So this is why we are looking at more possibility of the US dollar going up as well now. Okay, so this is where we're looking at. So if that is actually the case on the geopolitics fundamental side of things, then we want to look for bullish patterns for the dollar and look at other correlated pairs that could actually mirror that kind of pattern for the US, for the dollar-oriented pairs as well. Okay, so here, due to that, we are looking at the possibility of a drop in gold as well. So hence, this is what's going on. I've given you that sort of zone, and that was quite a significant support resistance zone, highlighted or colored in blue. So prices has not gone above that zone, but under that zone, which is now confirming the weakness again for the gold and the strengthening sort of status for the dollar at this moment of time. So again, you're looking at 1270 as the price for gold at this moment of time, and that 1270 is under by $10 of the 1280 psychological number, which then again further hints us that there may be more possibility to the downside for the gold. Okay, so as we go into the 1 hour chart, let's say, you can see that it's under all three lines, and it's, you know, giving you more hints now that it may be more possible to be lower than higher for the price of gold versus the dollar. Okay, as we go into the 5 minutes chart, you can see that we are looking into prices of gold finding resistance, and then it is finding more room potentially to the downside. As we can see, all the three lines, prices are just finding lots of resistance, and then more resistance as of now, looking at prices to the downside. As we go into the 15 minutes chart, you could see that again, this is exactly what we've talked about earlier on. You can see that the gap goes lower, prices go even lower from 5 minutes to 15 minutes, and as we go on to the 30 minutes, again it's even lower, and then you've got all the three lines pointing down. And as you travel on a 1 hour chart, you find prices just going lower and lower as you travel further to the higher time frames. Okay, so this is where you can see only prices began to really get stuck or find a bit of uncertainty at the 4 hour chart onwards. But as you go on to the daily chart, then you can see that there may be possibility to the upside as prices are still above all three lines in the higher time frame. So this does actually also does give us a hint that it may be finding a bit of corrective move at this moment of time because of the strength of the dollar. Okay, for gold, but on the long run there may still be a possibility to appreciate further, but again we need to measure that amount of correction for now. Okay, it may be looking like it's got big correction to the downside if you know if you leave time to actually give you a better, clearer picture due to the position for the dollar. Okay guys, so that is gold for you guys. We'll just look into USD CAD a little bit, okay, before we go on to some crosses like the AUD JPY and the Euro GBP. Okay, so we're going to the USD CAD, okay, just because we want to also know about the impact of oil towards the Canadian dollar as well. And let's look at USD CAD here, but before that, we'll just clear off a couple of things here, indicators or lines, and we could see that just, you know, offhand, we could see you've got some rejection going on to the downside, and then found support right on the dot of the 200 exponential moving average on the 1 hour chart for the USD CAD. So the USD is looking like it's got some support, but again, prices is you know, a bit unpredictable in terms of the direction because it's in the uncertain sort of zone in between all three lines. So if we go onto the 4 hour chart, you could see that that support just got higher. So yes, they've got more bias or potential to the upside for USD CAD. As you can see, found support at 50. You've got that candle going on, but let's look at right, and then let's look at left after that. Look to the right, it's 3445, which is really close to the 50 psych number. As we look into the look to the left, you could see some resistance going on. Let's say we find that family of candle there, find its highest body right there, okay, and then the highest wick which is right there. Now, this simple drawing of the zones itself gives you an indication of where it would be best for us to consider more bias to the upside only after it reaches 3454 and above. So 1.3460 and above would be a good price to look into more buying sort of certainty, not certainty, I would say, more what do you call that, clarity in terms of direction to the upside once it goes above this zone here. Under the zone, of course, it's got more challenges because of the 3 moving averages right there. Okay, so there we go. We have got a little, I think it's clearer picture right there. It's got more room to the upside. You can see that you've got lots of, support resistance in within this zone as we go on like that. You could see a big fall there as well. So this is a very, very good zone to consider. But again, keep it simple. You want prices to appreciate further, go above the zone to give you that upward type momentum. At this stage, a little bit too soon. So the price to watch out for USD CAD to the upside is 1.3460, which is 10 pips above the 3450 psychological number. Okay, so that's the USD CAD. Now we've touched a couple of pairs already, giving you some opportunities as well, especially the Euro USD, a couple of others as well. Let's just look into 2 more pairs, which are the crosses, Euro GBP and AUD JPY. So let's just clear all that first, giving you a bit of an idea of the trend, and then I'll open up the session for questions, and we can then discuss further. Okay. All right, let's see that. Now, we'll start with the 1 hour chart. On the Euro JPY, you can see, as I do that, you can see that angle itself. You've got movement. I mean, all the Euro-related pairs have actually found that gap up, of course, due to the geopolitical, political side of things, mainly the elections that's going on in France. Okay, and 1 hour chart, you can see it's above all 3 lines, found that market gap. Now the question would be the same for the other pairs like Euro JPY and Euro USD, whether it will close the gap or find that movement upward, sooner than expected. Okay, so 4 hour chart, you've got the uncertainty going on. The daily chart is just under but found resistance, so I'll just prefer to go on to the lower time frame and see what we can actually gather from the movement. It is still the same with the other pairs like Euro JPY and Euro USD, whereby you see that the prices are above all 3 lines. As we go into the 15 minutes chart, you could see that it found support and moved even higher. So you've got the lower time frame for the Euro GBP signaling or hinting you some movement to the upside. But as we see the prices to the right, 8491 is just too close to 8500, which is a psychological number. As we look to the left, we have got resistance here going on. Okay, so we need to then mark this area here, for example. Okay, based on this family of candle, highest body, highest wick, and you've got a zone right there. Okay, now prices have actually just touched that zone right there, and that would then prove or give you a hint of a resistance zone going on. So prices need to go above the 8500, as I've mentioned earlier on. That's also marked by the 2 lines here of the resistance zone. So it needs to go above 8500 by 10 pips, right up to 20 over pips to reach the 8530 onwards. Then you've got more room to the upside. As we go to the 1 hour chart, you could see that that zone automatically mark that very huge resistant fall. So indeed, that zone that we've just drawn have found a lot of previous resistance as well, and a huge drop right there. So this is a very good zone that was drawn, a resistance zone. Okay, so hence the reason you could see prices just floating there, but then it's under that zone at this moment of time. So you've got more room to consider that the bias would be to the downside as opposed to the upside, unless it pierces through this zone to the upside and goes towards 8530 and above to give you more room to the upside. But then once it does go above, you would then need to look at this area here as well with a significant drop. Okay, and this area as well, and draw a zone there. But at this moment of time, we're just looking at for Euro GBP, there may be a hint that it prefers to close the gap first before actually going further up. Okay, all right. So let's go on to the next one. Next one would be the AUD JPY. It's just giving me uncertainty due to the way it's actually trading in within all three lines at the moment on the 4-hour chart. Let's just clear off all these lines so we get a better picture of what's going on with the AUD JPY from the trends perspective. So as mentioned, it's uncertainty in the 4-hour chart. As we go on to the 1-hour chart right here, we could see that you've got prices to the upside. It's given more room to the upside, and as we have mentioned earlier on with the trend, AUD is one of the three strong pairs, so it's giving you that opportunity, perhaps the bullish opportunity to the upside, okay, for the AUD especially. But again, because it's combined with the yen, and yen all across the board today is just showing loads and loads of weaknesses, and most of the investors following the top 10 as well, as I've mentioned, quite a number of pairs that involve the JPY would be seeing that investors are selling the JPY as opposed to the other currency that it's paired with. Okay, so yen overall is on the weak side anyway, so this is giving us that strength confirmation of the AUD. As we go into the 4-hour chart, we have got that as I've mentioned, and we've got the bit of a mixed type signal between the 1-hour, 4-hour, and daily. You've got no clear match at this moment of time in terms of trend. You don't see that all three time frames, 1-hour, 4-hour, and daily, showing you the same thing, meaning they're not showing you candles under all three lines or above all three lines. You've got one time frame showing you one picture, the other, and things like that. So it's a bit of a mismatch at this moment of time. So it's not really an ideal trading time for AUD JPY. Perhaps the market is still waiting, would like to marinate prices further before we find a clear big direction to look forward to for the AUD JPY. Okay, so if just a matter of curiosity, if we go on to the weekly and the monthly, again, it's just things are just not clear. So let's just go on to the lower time frame, and you can see even on the 5-minute chart, it just got prices in between all three lines, and the 15-minute chart as well, we've got the same thing. Now, with the AUD JPY on the top 10 list, I think we have seen that to look into still the upside move, mainly because of the yen being really weak. So investors themselves are looking into the upside, or have been actually buying the AUD versus the JPY. Okay, it's even in the top 10 movers between the 3rd and the 4th place as well as of today. Still they're giving that, but then you should also look and trade what you see, meaning pay a lot of attention to what you see now as a trend. Now, as in the trend, is just not giving very, very clear picture, because three very common time frame between the 1-hour, 4-hour, and daily are just not giving you that clear indication. Perhaps you would need to look into more price action before you want to take to participate into this pair of AUD JPY. Okay, the investors may be already investing in it, looking at the direction to the upside, but these are investors who most probably are trading on a swing type trading, meaning leaving it for months or even years or things like that. Okay, so they have got that capital, enough capital in the millions maybe, to actually trade and just look into the corrections that doesn't actually impact them. But for yourself, it's probably a really wise thing to do, or it's also crucial to match the time frame that you're looking at with the equity that you have as well. Okay, the smaller time frame, smaller equity, smaller time frames, and vice versa. Okay, so this is important for you to realize. Now at this stage, I mean, me as a trader as well, I would be looking into a match between 1-hour, 4-hour, and daily to give you a better sort of potential. Okay, because now at this moment of time, we've got a bit of a match with the 5, maybe the 5 to 15 to 30, but with prices itself at this stage is at 83.31, and I would like to then look into to the side, to the left as well. You know, you've got all these areas here looking at resistance as well and support. Got some support area here as well. For example, here you've got this zone. You could draw a support type zone right there based on that candle there. And as we go above, you have got this area here to mark your resistance type zone right there. So then it gives you a support and resistance zone, just potentially roughly, so that you get an idea of how big that zone is before you can see the direction. So here you've got that zone to cover. So above that zone give you a better idea. That would be 83.47 is marked at that highest zone. So you would then need to look at 83.50 as your area that would find support. If it does find support there and then go higher than 83.50, then you can look into more how you call that, clarity of an upward movement by the AUD JPY. If not, then you could see it coming downwards, then it would then give you that corrective type move to the downside. Okay, so here it's probably best for you to wait till prices go above or under the zone to give you a clearer type direction. Okay, there you go, that's the zone right there. Right, so you need to mark that and be aware of it. Okay, I guess that's all I have for you guys for the pairs that we have gone through. It's probably best for me to open this session for questions from you guys. Now, anybody would like to start that off and share with us today on the pairs that you would wish to look into, or perhaps ask any questions in relation to your trade as of today or your previous trades? Or any areas that you might not be sure about in terms of the patterns as well, and we can always discuss that. Good. So somebody would like to start perhaps on the questions. Let me just look into that. Okay, I think we've got some questions coming up. Yes, that's good, very good. All right, yes, Sashi, you've got a question here. ABCD. Sasi's question is, do you think there is a ABCD pattern on the USD CAD? Okay, good. We shall look into the USD CAD, but I would like to just warn you something. The USD CAD is not, I repeat, is not one of the pairs that the investors are paying a lot of attention to, whether it is today or in the next few days or this week at all. Okay, because we don't see that in the top 10 movers. We don't also see we don't really see any big event fundamental on the economic calendar as well revolving the Canadian dollar. Maybe the Canadian dollar would actually be moving on one type factor, which is the oil movement. Okay, I just want to give you that warning. You know, always practice, look into the ABCD pattern on the USD CAD. Okay, let's just look at that. Could you tell me as well, Sasi, which time frame are you actually looking at for the USD CAD, for the how do you call that? For the pattern, for the ABCD pattern. Is that the 1 hour chart you're looking at? Okay. All right. Supana Devi, Ganesan, you've got a question here as well, and your question is advice on GBP JPY and CHF JPY. Okay, all right, good. Now, CHF JPY and GBP JPY. Yeah, okay, we can look at that, not a problem. The GBP, let me just do that. GBP JPY. GBP JPY, we could see that it's GBP JPY and the CHF JPY, they are both within the top 10 list, top 10 movers. Okay, so that's not too bad. Okay, because these are what investors are also looking at trading as well, because they are listed amongst the 10 top movers. So, okay, Sashi, we'll go to yours as well. I'll go to yours first, the USD CAD on the 1 hour chart. Yeah, okay, let's do that. That's 1 hour chart right here. Let's just look at USD CAD before we go on to Supana Devi's CHF JPY and GBP JPY. Okay, so here, as we could see, I guess you are asking whether or not you could see all these thread shares, your AB and then your BC. Now, you can do that only by looking at answering your question whether this is an ABCD type pattern. Can it be considered? Always use Fibonacci as your kind advisor. It has, the C point has to be a minimum of 38.2%. Okay, so if I consider this as my A, let's say my A starts from here all the way to B here, yeah, I need the C to be a minimum of 38.2, and in this case it's not too bad. It's good. It's at 38.2 here, the closing price, opening price as well to the upside, 38.2 sharp. And then we've got the lower here kicking off at the 200 moving average, which is quite good actually. This is not too bad at all to consider. So, but what we need is we need to consider the USD CAD as one of the top 10 investors are doing that. You know why? Because even though it's a very nice ABCD pattern, which we will draw right away now, let's say, but you might find that it will take a lot of time for it to actually move, because it's not one of the top 10 or not one of the pairs that investors are paying a lot of attention, because the volume may be low. Maybe it is an interest, but the volume of participation, the investors and traders are not trading it enough. If they are and putting loads of investment into it and trading a lot in the volume, that would then encourage the movement of that pair. Then you can see that it's actually moving. If not, you'll find it really slow, or it might go sideways, or it's just not going as fast as you would like it to go. Okay, so this is basically it. So here, for example, let's just do that now. A to B, and I guess you're looking at that, yeah? So I'll just go into the 4-hour chart so that I can see it as a whole and not have a picture cut, okay, on the pattern. So here, for example, we have got that pattern there. I hope this is the one you're looking at here, Sashi. This is basically it. So you've got A, you've got B, you've got C. I like to consider that as a C because it found support at right on the dot of the 200 EMA, and that is a very good sign. Okay, so anyway, it should actually measure your risk level by converting this ABCD pattern into a geometric pattern, because we can then find the center point area, right? So prices now at this moment of time, if I'm not mistaken, hasn't really crossed above or gone above the centroid area anyway. All right, so let's look at this one. Let's measure the risk on the USD CAD. Now we need to measure the risk a little bit more with the USD CAD, mainly because it's not one of the top 10 of the pairs that the investors are paying attention to. Okay, so let's do that. Now here, for example, let's do that. You could see that it is at the price here. I think it's really close to the 50 area, 1.34 50s area. So it needs to go above 60 anyway, but above the centroid is at 3463 and above. So this is confirming the point that it's probably best for you to wait until prices go further. Hopefully it doesn't find a resistance at this area here, because you know why? You've got the threat at the moment of this thing happening, because you've got the zone already. Yeah, you've got the zone, you've got it drawn. Let's say the center point, you've drawn it here, the center point. Yeah, okay, the center point at 3463. Okay, but then above that you've got a 50 moving average as well. So the prices could possibly find resistance at any point now, or close to the 50 moving average. Okay, so this is where the risk is. So let's just look into the 4-hour chart now, and I'm just going to polish this one up a little bit. Okay, now on the 4-hour chart, it found resistance, found support on the dot of the 50 moving average, which is very good as well. Okay, on the 1 hour, it was at the 200 moving average, correct? So let's say you're expecting prices to go up, right? Because this pattern is showing you an upward type move to the upside, correct? So what you would need to do is find the risk of where it has actually fallen very largely. Now, coincidentally, as we draw that side sort of, the centroid line, you see to the left, you've got some movement fall, but there was a very big move here, the falling move. Okay, so you see that area here was a very big fall downwards. Okay, because it fell a lot from this point here, which where prices is at now, very close to where prices is at now. So prices have actually fallen from there. So here we need to really watch out, because this was a very strong sort of a resistant zone. Okay, and it has actually fallen a lot to the downside. So this is where we need to be very careful with Sashi here, okay, because it may actually find resistance and copy that move previously, which actually happened here on 2017, this year itself, in January. So in January, USD CAD has fallen a lot at this point. Hence the reason we are now caught up and wondering whether or not prices can actually, whether or not the bulls now can actually beat previous sellers. Okay, this is what we want to know. So you see, unless it goes above, let's just be safe, 3463 and above and above. If you could wait till 34 70, 3480 and above would actually be much better, because we need now for bulls to be really strong to actually beat the previous sellers, because the previous sellers were really strong, okay, in the past. Okay, there was a very big fall here as well. Okay, and then lots of big falls at this area here, and we've got that big fall here. So we need to be very careful. So this is the zone to watch out for. Let's wait and see, because I would prefer for prices to also go past, and you can see that momentum building up now with the bulls building its strength, but I want prices and the bulls to go past above the zone and also go through and pierce through the 50 exponential moving average, which is right there. Okay, so you need to be very careful. So hope that's clear for you, Sashi, on the USD CAD. Okay, so you know your position now, you know the risk level that you are at, even though the pattern looks very nice. Okay, looks very nice, but it poses more risk. Okay, because number one, it's not the one that investors have actually pushed prices a lot up. It's not one of the 10 top movers as well. Okay, and then we've got all these challenges happening at this moment of time, and it's actually challenged by a very big level, a very big resistance level as well. So we need prices to show more momentum. If I was you to actually trade conservatively, I would rather be safer by waiting until it go past that B point there to give me at least a bit more assurance, because you can pay a lot of attention to the other pairs now. Top 10 pairs would probably be better, but then the top 10 pairs, if you correlate the top 10 pairs, you can still correlate them and find the majors that they are correlated to. For example, the Euro JPY, very highly correlated to Euro USD, so you can look at Euro USD instead as well. Okay, all right, there you go. All right, let's see. No problem. Can you repeat the currencies buyers looking at just now? Okay, let's see, Sasi, for the USD CAD we're looking at, right? All right, let's look at that. On the 1 hour chart, currencies that they are buying, I'm not really sure what you meant. I mean, the top 10 is from actionforex.com, where you look at the top 10 movers, and you can see that Euro JPY, CAD JPY, and all that are amongst the 10 pairs. But if you're looking at USD CAD, it's probably best for you to wait till the B point and above. It's a safer area. That is if it is for the USD CAD. Okay, is that what you meant, Sashi? Anything that I've actually missed out, let me know. Okay, you could see that prices are actually challenging that now. It's actually going towards the 50 moving average, so there may be some room there. Okay, so which one, you've asked me, Sashi, about repeating the currencies buyers looking at. I'm not really sure. We were talking about the USD CAD. The buyers, the currencies that the buyers are, not the buyers, but the traders are looking at are based on the top 10 in the Action Forex as well. But of course, I double check that a lot with the bank reports and all that, and I see that there's a commonality between the Action Forex one and the bank report. So clients, if you're looking at traders at the moment, the top 10, they're actually concentrating on Euro JPY being the first in the list. Okay, so Euro JPY, you can always correlate that. You can correlate Euro JPY. So Euro JPY is correlated quite highly with Euro USD. Okay, the reason why I say that is because if you are concentrating or focusing on what you call that, the major pairs, then you can still look at the top 10. If the top 10 does not show you the major pairs, let's say they show you the Euro JPY or CAD JPY, you can always use the correlation table to find the the major pairs. So Euro JPY, for example, is not one of the major pairs, but you can then know that Euro JPY is quite correlated highly with the Euro USD. So then you can then look into Euro USD instead, and look at whether you can find clearer trend and stuff like that, and patterns and all that, and start trading the Euro USD instead of the Euro JPY. This all depends on your equity level, the pairs that you're looking at. If your equity level is on the low side, I would then suggest for you to look into major pairs. Major pairs are the Euro USD, GBP USD, USD CHF, GBP USD, and all these are major pairs. Major pairs are usually the pairs that are connected, I would say, are paired up with the US dollar. These are called the major pairs. The ones that are not paired up with the dollars are called the crosses, okay, or the exotics as well. Okay, so for those who are trading, you know, lower sort of equity, it's probably best to always look into building up your equity first by trading the major pairs. But it's no harm for you to look at the top 10 so you can correlate it back to the major pairs anyway. Okay, I hope that actually clears out things for you, Sashi. If not, you can always send me a message again and I'll be happy to help. Okay, brilliant. Okay, so let's move on to Soparna Devi's CHF JPY and GBP JPY. Let's look into GBP JPY first, okay? Let's look into GBP JPY. I've got CAD, CHF, no, don't. Euro GBP here. Let me just see the CHF here. Let's just change that one. CHF. Let's go into GBP JPY first, okay? There you go. So GBP JPY, just at a glance, you know, 5 minutes itself is not looking that good. It's within all three lines. Let's just start with the 1 hour chart first on the GBP JPY. Now, GBP JPY is showing me a bit of an upward type momentum, but look at the angle the three lines are trading. They're not very clear. They're not steep enough to show that the three lines are pointing up. You know, they're not really that clear. Okay, but candles are of course above all three lines. Okay, as we go on like this, you can see that the angle is quite nice to the upside. Now here, when we zoom out a little bit like this, that's why zooming out is more important than zooming in, especially at the first time. You know, the first instance of looking into a chart, it's best to always look at a zoom out type perspective as opposed to a zoom in perspective. Okay, so here you can see that these three lines are moving very nicely to the upside on the 1 hour chart, showing you a very nice angle, clock angle, as well as like 1 o'clock. So you've got a lot of strength maybe communicated to you as a trader, is hinting you some strength to the upside. As we go to the 4 hour chart, you could see that that angle as of now is even more steeper. It is at 12 o'clock now angle. Okay, so as we go into the daily chart, you could see that it's this movement here, of course, downwards, and you've got that upward move, but I wouldn't say that very high up or strong at this moment of time. You've got a bearish candle now at the daily chart. So let's build the story from the 5 minute chart. From the 5 minute chart, you've got uncertainty at the 5 minute chart. We just don't need to pay more attention, especially if you see straight away that you've got the candles, you know, in between all three lines. You can always ignore that. And move on to the 15 minute chart. Okay, so here you could see that yes, you've still got that uncertainty as well, because it's still inside under that 50 moving average there. And I like clarity, so I would prefer for candles to be above and strong above, you know. So here itself, it's just looking like it may have found support at this area, but we're just not sure whether it will come down a bit more and find support exactly on the dot. So yes, it's to the upside, but not very clear. On the 1 hour chart as well, it is finding support here, but if it had found support at either one of the three lines, then you've got a better picture that it may find stronger support. When it finds support at either one of the three line or resistance at either one of the three line, you've got a better cover of what type momentum that it will create. Okay, it'll be stronger that way. If not, it's not that strong. So this is basically it. Now we are trading at 140.89, so it is at the 80 area as well. Not really a good psychological number to consider. I mean, because it's at the 80s area, it's just thinking for itself as well. Okay. In terms of pattern, I don't really find something really that neat and structured for it to consider as a pattern as well here at this moment of time for GBP JPY, and it is the same for the 4-hour chart. Here you've got that gap up. I think it's also considering closing that gap, so it is really risky at this moment of time, because you've got it finding resistance there on the 4-hour chart, and if you look to the left, you could see that that mirrors an area. You see the prices now, yeah, the prices now is mirroring a lot of areas of support and resistance as well, but we want to also find a sort of significant drop. Now, what's prices doing as of now? Let's look at 1-hour chart first. Okay, it's just not very clear whether you've got that downward momentum or not. Let's consider a 4-hour chart. So let's say you've got a stronger candle, bearish candle on the 4-hour chart heading to the downside. Do we find any previous, could we find previous support or anything like that? You've got some concentration of candle here. You've got some push of price to the upside here as well. So let's use this movement of candle here, this family of candle here with the lowest body and the lowest wick right there. Yeah, so we've got that. Now we can use that as well just in case, so we can draw the third one right there. Okay, so these are all support area that I've actually drawn based on that family of candles here and also this one here. Now as we go on, we can see that if we go on the daily chart, see how well we've actually drawn that line, if at all it was a correctly drawn one. Now here GBP JPY has found a very strong support at the zone that we've drawn at the 140.40 area or 140.50s area. Okay, found a lot of support, so you need to watch out for this one here. Okay, this one here, GBP JPY, you need to look at that level there between 150 to 140, okay, that area, because it found a very strong support that was back in 2013 in April. Okay, found a very big rise of price all the way up, and that's a very big move. Okay, a highly significant move. As you can see, that was the point at the price now that it has found a lot of support from 2013 here, right, in April, right up to the highest peak there until 2015. Okay, almost 2 years or so, and that was a significant move. So it was a progressive move upwards from that point. So we need to pay a lot of attention at the price now, because potentially it may find a support. But if it does find a resistance, then it would actually then be a very strong fall to the downside. But at this stage, what is happening is that we have got a zone here, and prices is still trapped in between this zone here. But I would like you to really watch out for this area here. You are, we are now trading GBP JPY at the 140.80 area. Okay, then to the upside you've got 140.90 area. So I would look into the 141.00 area to look into what exactly would happen when prices reaches that area of 141.00, which is a very significant psychological number. Prices need to go above this one here. In my guess, it will do one of two things. It will either go under the zone to give you a very big fall because previous support may have now become resistant, or it could go above that zone and to mirror a big move, as big a move or equivalently big move, or a sort of nice support level would actually happen above that zone. So 141.00 and above would give you a better idea of whether or not it would like to mirror the previous move to the upside for the GBP JPY. Okay, hopefully that is clear for you. All right, it's very important to look into that because that was a very significant support level that I've just shown you earlier on for GBP JPY. Okay, lastly, we shall then visit the CHF JPY. Let's just do that very quickly. Let's go on to the CHF JPY now. Okay, there we go. Got CHF JPY at a glance on the 30 minutes, giving you a lot of movement to the upside, correct? You've got candles above all three lines. As you zoom out, you could see the angle as well to the upside. As you go onto the 1 hour chart, you could see the same 4 hour chart as well. But 4 hour chart, we've got that stuck in there. Didn't really find support at the 200 moving average exactly, but then you've got the candle just peeping out upwards, just right above the 200 moving average. So let's ignore the 4 minutes. Let's look into the daily chart. We got prices just trapped now in between there. Okay, what about the longish term? Just not very clear as well. It's got under, but not very strong under, and this you've got a lot trapped. So a lot of trapped up type prices for the CHF JPY from 4 hour, from daily, weekly to monthly. Let's ignore all these three for now. Let's go on to the 4 hours, or let's go lower. Let's go lower at the 5 minute chart. 5 minute chart, as we zoom out, you could see that just by zooming out, you've got some support. It's heading upwards, okay, and upwards a little bit higher, but not very, very you know, far away or just, you know, a good distance away from the three moving averages. So if we go on to the 15 minutes, we've got it a little higher. Okay, as we go into the 30 minutes, a little bit higher. So yes, we've got a bit of a bias to the upside for CHF JPY. So all the ones that we've showed you today against JPY, it's sort of confirmed about the investors' interest in selling off the JPY. So the JPY is looking like it's got a depreciative status, very, very weak. Okay, so that's why, hence you see the CHF JPY as well. It's got a little bit more bias to the upside, mainly because the JPY is weak. Okay, so here again it's the same thing, because of that big gap that has actually cost the markets actually cost to have. Then it would be a very big question of whether to close the gap first or to go higher and then close the gap later on. You see, so this is a matter of timing as well. When would the market like to do that, to close the gap or not at this stage? Okay, so it's got a bit of a movement to the upside, but I wouldn't see a very big movement to the upside. But as you go to the left, you are challenged at this moment of time with a very big fall here, and that big fall has touched that 200 moving average. Okay, and that is a very significant fall that has actually happened here. Okay, as you can see, this area here. So I would suggest to draw a nice support resistance zone, okay, based on that fall. Okay, and that was a very significant fall as well, because you've got all the way through is a big fall right after that. And when did that actually happen? That actually happened for CHF JPY 2017, this year, 5th of April. Okay, 5th of April 2007. So it was, you know, a couple of weeks back. So beginning of the month. So you've got that. So it's probably best for you to draw based on the lower body, okay, highest body, sorry, and the highest wick. So you've got that zone right there, and that this is a very nice zone as well, drawn mainly because the candle found resistance on the dot of the 200 moving average as well and start falling through. So that is a significant and very important zone for you to also consider, and that is also because prices is right at that area at this moment of time. Okay, so here you go. You've got candles now stuck there. So because it's a resistance, there may be a potential as well for prices to find resistance and back downwards. But if it does do that and find resistance, it's probably best for you to also consider prices coming down a little bit more until it goes lower than 110.80 and lower, to ascertain and give you that confirmation of a further potential to the downside, mirroring this big move here. Okay, this area here, right? So that is a very, very significant falling area or depreciative area, as you can see right there. Okay, so I think that was a very good zone to consider as well on that one there. Okay, so here you go. You need to first understand what would actually happen here. Would it find resistance? If it does actually find support and this zone is being pierced through, okay, by this very long bullish candle, then it means that that previous resistance has now become support, which could potentially become a strong support up to the upside. So this is a waiting game, probably best for us to wait and see whether or not prices would visit the 110.80 area and below to give you that bearish momentum. There we go, guys. So that is for you, CHF JPY and GBP JPY, and initially before that, the other pair as well, and all the other pairs that we've actually looked at. So any more questions at all, guys? If not, then I'll wrap it up here. Hopefully that's been enjoyable for you. Hopefully you guys got your questions answered for that, and I would like to wish you guys happy pipping for the days and week ahead. Any questions at all? If not, we'll just wrap it up here, guys. No questions? All right. Okay, good. Thank you. Thank you guys as well. Now, I'd like to wrap it up here then. And if you guys have got any questions, feel free, drop the questions for every one of us in the group at GTI. Sharing is caring, of course. So this could actually be a learning process for all of us, including myself as well. Okay, so let's end the session here, and wish for you guys to join me again on Thursday, this coming Thursday, and we shall then talk about the market again and ride along the trend. Okay. All right, guys. Thank you very much for joining the webinar today, and have a very good evening. Bye bye.